Performance management is an awful little topic. It's not very interesting. It's difficult to apply. So I think what we want to do is just maybe start at the end outcome. What are the possible questions, and then work backwards. Possible exam questions could be: describe, explain, or outline the performance management strategies. Propose and justify a performance management strategy the business could use, or discuss, evaluate, or analyze the pros and cons, weighted consideration, etc. of a particular performance management strategy. So what is it? Well, we'll just say so basically what we're asking is, how can you tell whether someone's doing a good job? So we'll take this woman here. So we could say, so the ways we're going to cover, we'll give them names in a second, but we'll say, did she achieve the objectives the business set for her? We'll call that management by objectives. Did her manager evaluate her performance well? We'll call that appraisals. How did she rate her own performance? We'll call that self-evaluation. And lastly, her manager, teammates, and clients get to evaluate her. We'll call that employee observation. So for each of these, we've got to know what it is, some pros and cons of it. So let's start with management by objectives. Really difficult to understand and explain. Avoid it unless you're asked about it. But a process of setting those SMART goals which relate to an employee's area of responsibility. And then basically we evaluate their whole performance on did they achieve their goals. And that gives people a sense of direction and a measure for assessing their workplace performance. So to sort of demonstrate how it works, we basically say, well, step one, the business has overall goals. Okay, so it sets the goals it wants to achieve. Then it breaks those down into goals for each department. So it could be the marketing department, the IT department, etc. And they've got to be linked. So the goals for the business are broken down and linked to the goal for each department. Then we break that down into goals for each work team. So within the marketing department, within the advertising team, the content team, the social media team, they get their own work goals as well. And that's related to the departmental goal, which is related to the business goal. And lastly, we'll get each individual employee ends up with a goal. And we're going to judge everyone's performance. We're going to judge their performance on whether they achieve their goals, the team's performance, did they achieve theirs, the department's on theirs, and therefore the whole business on did it achieve its goals. So some pros and cons, very good goal achievement here. People have goals to achieve so they can focus on it. They're very clear on what is expected of them. And also it's feedback. People, if you've got measurable goals, when we looked at Locke, you say you can actually get good feedback on your performance. Bad things, very difficult to set good goals and link them from every individual to the whole business. So task focus, people come focus completely on the goal and overlook every other aspect of their jobs. And therefore there's conflict in individuality because people don't want to help each other if it means someone else will achieve their goal and I won't. So that's the most arduous one. Then we've got appraisals, a system which measures the performance of the individual by determining how well they've done their job, providing feedback and establishing plans to improve. So we've got the business and the employee. The business conducts an appraisal, and we just want to know, are we hiring the right people? Are we training them right? And, who should be rewarded, etc. So pros and cons. Pros, it's very comprehensive. We're getting an overall picture of someone. It's a tailored assessment. We don't have to, we can tailor this to each individual, how we assess them, even with an interview. And it's very transparent because you've got to keep records. So then we've got a record, so paper trail to verify how people were rated on their performance. Disadvantages, relies on biased feedback. As soon as you bring another person into it, it's very biased. Ineffective testing, so if we do test people, it can provide ineffective data, and it's just basically based on data, maybe not relationships. That brings us to self-evaluation, which is pretty obvious. Employee assesses themselves. Did they achieve their objectives and contribute well? Pros and cons, well, bottom-up information. You're getting information from the individual that you might not get because they get to have a say about how their performance, how was it affected and so on. And it's also good motivation. People feel like their opinions count. Disadvantages, if it's very biased information, what do you think people are going to say? I did a bad job? Not usually. They're just going to overrate themselves. They're going to withhold any bad information. And if it's linked to rewards, like people get a bonus if they got a good evaluation, then you're going to get really biased feedback. Lastly, we have employee observation or 360-degree feedback. We get feedback from the employee's manager, teammates, subordinates, and clients. Everyone who the employee comes into contact with. Good things about that, we get very depth and we get a lot of information about the employee from a range of perspectives. It also identifies development opportunities because we're assessing every area of their performance. We know where they need to improve, and we're going to get more human information here because rather than just a number like a goal, we're going to get feedback on people from other people. Disadvantages, again, it's biased. It relies on people and not data. And time, it takes forever to get feedback from all these people. And also a negativity bias. People are more inclined to provide negative feedback than positive feedback. So that's a pretty common thing to